Welcome to the Safe Wheel live stream, where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trade system for free. And the system is currently actually down year to date. What is this, January 9th? I think we're down a little bit here. We'll take a look at that. It's a small percentage, maybe 1% or something. I'll get into the details on that. One thing, I've been having power outages, so if we go blank, that's the reason why. All right, please type in the chat that you can hear me okay. I'm going to assume that you can hear me. Sounds good. Okay, good. Thank you, Kurt. You knew I was going to ask that. Make sure to post any questions you have. I see that a lot of people are posting questions. That's very good because I don't want to end the broadcast without answering your questions. I want to make sure that everyone understands the Safe Wheel. So let's get into what happened last week. I have the earnings edge, of course, where I have a situation where I can buy a long strangle. I can go long a call and a put for a discounted price, and I'm hoping for a big move and out of the ordinary move. Last week, we went with JP Morgan, and we didn't see that big move, and I lost $160 on that last trade. So my overall record is 26 wins, 10 losses, and 3 break evens. But since I started the new exit, the last tweak that I made, the record is 5 wins and 2 losses. I expect to have, half wins and half losses, but lose around $200 per trade and make around $500 per trade. That's what the back test showed. So again, JP Morgan so far this year, only 1 trade, obviously. And we started this account with $8,177. It's down to $79.78. So that's what happened with the earnings edge last week. So one of the good things about it is that one of the ways I tweak the system on the earnings edge is that we take smaller losses and we take larger gains. So you can see, we lost $160, but in the last few trades, we made even up to over $2,000 on one trade and over $1,000 on another trade. So we're trying to, take these little losses and these large gains. That's the goal of the system. And so far, that's the way it's working out. Okay, second, the Premier Level 5. Let's see what's going on with that. This account started with 33,583, and now it has 33,800. So it has about $300 profit approximately. I mean, we're just starting the year, so $300 divided by what? 30,583. That's, maybe 1% so far up, but we're only 9-10 days into the year, so it's doing well, doing as expected, pretty much. And I really like this trade. I mean, the thing about this trade that differs from all the other ones, I'm saying not my other ones, but the other ones that are out there, is that it can profit in any market environment. It can a bull run, sideways, a grind down, and a crash. This will still come out ahead based on the back test and forward test with real money. Now, we haven't had a crash yet with this particular system on, so I can't say forward test, but I've already back tested it through the crash, through multiple crashes, and it works good. Okay, so on the Premier Level 5, one of the things I talk about is annualized in 2022, it made 15%, where the market was down 20%, and the largest drawdown was around 3 or 4%, maybe 5. Sometimes it's a little difficult to see because of the way the reporting is done with these options on futures with Thinkorswim. Okay, but that's going well, or as expected. Let's talk about the Safe Wheel. It's this account here. Yes, Uber. Wow, Uber is like doing exactly what I don't want it to do. So you can see this is the situation where Uber does what you don't want it to do, because remember, I was holding or potentially holding up 200 shares of Uber and decided to just get out of everything and start over. And then Uber shot up significantly. In fact, here's another situation that occurred. I actually had that $27 call. I believe it was a $27 call. And as I looked on Friday, it was not in the money, so I did not sell it because it wasn't worth anything. And then I came in over the weekend and we're up 5%. And that $27 call would have done me well. So a lot of people talk about how, yeah, you should have that call on over the weekend and all that. Well, here's one of the situations where, yeah, you were right. I wish I had that call on over the weekend. I wish I had that hedge to my hedge over the weekend, because you can see that I'm down 50 bucks today, where I could have, broken even if I uh, had that call on over the weekend. But I'm still not going to change the system. I think I want to keep it simplified, and I think it works well without those little nuances. But what am I going to do next? Well, I still have my put hedge on. I'm going to check and see if it's within 70% of the stock price. So the stock price is 27.47. 27.47 times 70% is 19. So the put needs to be at 19 or higher. It's at 20, so it still fits. So I'm going to keep this put hedge on. Okay, knowing that my put hedge is okay, I'm going to start the traditional wheel strategy, which I'm going to sell a put out of the money. And let's see where I can get for that. I want to go into the nearest expiration, and I want to get at least $27 or $28 for the put. So I can get at $26.50, I can get over that $27 right here. $26.50 put, so I'm going to sell this one. I'm only going to do one. I have between $5,000 and $10,000. And the mid price is 35. Might shoot for 36. Let's see here, selling put over 26.50. And let's get this filled. Look at that mid price moving against me. It's interesting how that works sometimes. I'm surprised that's not filling. Oh, the mid price moved again against me. Wow, that sucker moved down $4 while I was doing this. Okay. Now we have our premium sold for the week. And we're going to look to collect 30 bucks. And we want to hedge this hedge. So we're going to go ahead and buy a long call around $5. I won't pay 7, but I will pay 6. Here's one for $5 at 30.50. I'm going to go ahead and buy this one. Just one of them. Okay. So 32 months, 27 bucks. So, gold make $27 this week. And if something crazy happens and the market crashes, this put hedge is going to make us a lot of money, make me a lot of money. Or if the market just shoots super high and goes above this 30.50, I'll make a lot of money. So if we see some extreme move, the system's going to make money. And then other than an extreme move, should make money over time with the premium. But, if the stock moves perfectly against you, like it kind of has been, you can still lose money with this system. As you can see, that's what's happening. You can see I'm down 140 bucks already year to date, because this account started with 6,085 and it's under $6,000. You can see here. It seems like Uber has been kind of I probably broke even or maybe even lost money on Uber overall at this point. Macy's did really well, and Uber just kind of is making those perfect moves kind of against the system. But I think that eventually things are going to even out, and Uber will work out. Let's see here. Any other? Again, in 2022, this particular system, the Safe Wheel, was up 21.7%. It had a max drawdown, the largest drawdown of 4.8%. It started with $5,000 and it's close to 6,000 or 59.40. Okay, so that is the safe wheel, and you can, if you want to kind of skip ahead and get the safe wheel guidelines and flow chart and why how I pick the stock that I pick, you can, instead of watching all the live streams, which I show that for free, you can go ahead and sign up. There's a link in the description. You can get all that for 89 bucks. So a full trading system that works, that made 21% last year with minimal drawdowns for only 89 bucks. I think that's a pretty good deal if you compare that to what's out there. Okay, well, let's get into questions. Eddie, on the safe wheel, what do you do with the hedge if you're holding 100 shares and the hedge is closing to a 100-day mark? So I'll roll that. Yeah, I'm holding the 100 shares, so I'm still in the trade, right? I'm not going to get out of the trade because I'm in it with the 100 shares. I'm looking to sell covered calls. So I'm kind of married to that stock at that point. So I'll roll this 100-day up to the 150. So I'll just roll it. I'll pay for that roll. It's going to cost money to roll that. Called away on Uber. Good. If you're called away on Uber, you probably did quite well, as long as you sold calls out of the money. Hedge puts are down 30%. Strike price is within 72%. Says sell a put, buy a protected call. That is the right move. Yes, that's what I just did, and you are correct, Joe. Yes. Kurt, asking about the need to roll the put hedge without a good expiration date within 100 to 150 days. From what I've seen, you would ask yourself if the entire position is profitable or not. True. Yeah, maybe I misspoke here about this. If the entire position is profitable, but that's only if you. So if the entire position is profitable or not, the question can be asked in a few scenarios. The main scenario is that I can't sell any more premium. Um, if I can't sell any more premium, then I'm going to probably exit everything out. But not based on whether the put hedge, when I move that put hedge, if I'm not in the stock, if I don't own shares, I could move to a different stock and I won't ask myself if I'm profitable or not. I'll just have the option to move. You have to give me more specific scenario. I could look it up here on the flow chart, but you can roll that put hedge. I would roll it and stay with the current stock that I'm in most of the times if I can get premium. That's kind of the short answer to that. Looks correct, Joe. You should also look at the expiration date on your put hedge to see if you have to roll them to a later date. In today's case, you do have to, yes. So I guess there's some people on some different cycles than I am, and their put hedges are coming close to 100 days. That's what this looks like. Remind me to talk about P&L instructors, so I've reminded myself. I asked you guys to show me some other instructors that are sharing P&L, and it looks like we found about 4 of them that I'll get into, I think, further details. I don't have the details now, which I was surprised to find 4 of them, but I think 2 of them show on a consistent basis their P&L, which is really important. And then 2 of them, I think they just kind of throw it out there whenever it's convenient. But one of them being Adam Koo, he actually didn't throw it out there when it's convenient. He said he was down 30% this year or in 2022. I thought that was quite interesting that Adam Koo admitted that he was down 30% in 2022. I think he doesn't normally do that unless I'm wrong. And it looks like the bull market or the bear market kind of caught up with him. But at least he admitted it. I'm surprised. The other one I can think of, there's a couple other ones that are smaller YouTube channels that show their P&L. They lost money, but they show their P&L on a consistent basis. And then there's the guy from Theo Trade. Can't remember his name off the top of my head, but he actually, it looks like as of November of 2022, he was up like 185 grand, which the traditional options traders, using the Tasty Works or Tasty Trade kind of thing, the traditional options traders or trade structures, they probably did quite well in 2022. So they'll do well in up market, sideways market, and even a grind down market. They can do okay. It's just when that crash market comes is when they really get hurt. So yeah, I'm not surprised that someone trading traditional option structures are made money in 2022 at all. And it's just beware of the crash, which will eventually come, and everything becomes correlated. But those are kind of the four. I might get into more detail and look those up and possibly even make a video and get details on that. But I appreciate you guys showing me people that actually share their P&L, because it's hard for me to find that. And especially the guy that's up 185 grand, I wonder if he shows it on a consistent basis. That's kind of key, but maybe you guys will let me know. Kurt, first time here in the live, but I've seen all the videos from the last year. Make sure to drop a like and subscribe, as Will would say. You got this. Thank you, Kurt. Joe, expiration date on put hedge 159 days. If that's the closest you can get to 150 days, that's fine. I mean, that's what I would do. Good morning, sounds good. Thank you, Todd. I appreciate you. Let me know the audio is working. Kurt, Tron, good morning. Some guy says it's all good. You can hear me. Uma, you can hear me. Hello. Todd, let's see here. When evaluating a stock for the safe wheel, what is the max individual premium you'd pay? For example, CHWY. CHWY. So we're looking at maybe the 130. We're looking at 80% of 39. 39 times 0.8. We're looking about the 31. About the 30. Probably this 32, $3. I don't really have. I know I probably mentioned it before. I don't want to pay too much for that put hedge. This doesn't look bad. You've got the implied volatility looks okay. I would not shy away from paying this $3 mark. It's a little bit high, but I wouldn't shy away from using that put hedge there. I hope that answered your question, Todd. Okay. How long do you plan sticking with Uber? How long do you plan sticking with Uber? Down 10% since starting. Yeah, man, I'm like, why? How is this Uber thing moving perfectly against me? But I just don't think that it, can continue to do that. I think it's just an anomaly, and statistically, if I believed it would continue to do that, I would get out of it. But I don't really have I'm not really superstitious about like a stock. Maybe I wish I would have been in Macy's still. I don't know. Macy's was really good to me. Let's see. Macy's even in here. What's Macy's trading for? Yeah, it's at the bottom range. But I don't think that Uber itself has any kind of stigma or any kind of pattern that's not going to revert to the mean and therefore not become profitable at some point. Otherwise, I wouldn't trade it. But it fits all the criteria. Is a put hedge for 159 extra good under Uber? Yeah, what was the rule on that? Was it 150 days without going over? I can't remember exactly. Maybe you guys will let me know. I wouldn't shy away from 158 days. It's not 80% of the stock price for the put hedge. Why do you say 70%? So 70% is if I'm in an existing put hedge, do I want to move it? But if I establish a new one, I'm going to go at 80. So let's say it was at 65%. Then I'll move it up to 80. I like to do as little as possible. I don't like to make a lot of trades or adjustments because, the commissions catch up to you sometimes. Charles, in 2022, it seems the safe whale made all its gains in the first 6 months and then went flat. Any idea why? Just a statistical anomaly, just statistics. I don't think there was any particular reason or anything I could just go in there and say, this is what happened and this is how I can avoid that in the future. That's kind of similar to picking a direction, like, oh, the stock went up in the past, so it's going to go up in the future. Nah, it's just statistics, in my opinion. Will, since the underlying has gone up and the put hedge is in danger of being more than 30% of the strike, wondering if this week we should sell the closest put to the money. Yeah, I mean, so it's always possible, with my put hedge. If my put hedge was like super close, say it was at 90%, I would probably more think, wow, maybe I'll go closer to the money because I don't have as much risk to the downside. But I'm at, I don't know what it was, between 70 and 80%. So I do have more risks to the downside. So I always like to be out of the money for that purpose, if that makes sense. Brian, how many times and how much has the long call been closed for a profit? I think I estimated that at like only twice. And has it outweighed the cost of having it? And I would have to say no. I would say that it does end up costing money overall. But I like to be protected. I like to be hedged. And if there's some major move, maybe there's a takeover. Maybe Uber, somebody says they're going to take over Uber at $50. I want to participate in that crazy move. And I like to protect my put hedge. I like to protect. It's kind of like car insurance. Do you really make money with car insurance? No, but I still think it's a good idea to have it. Brian, what else is the absolute minimum account balance to enter an earnings edge trade? So how much of a drawdown from 5,000 can be sustained before no longer being able to continue trading the alerts? I think my account went down to $3,500 and I did just fine. I mean, it depends on the stock. You might have to sit out a couple. Let's say you only have $1,000 or $1,500. You might not have enough money to make the trade. Maybe one tranche might be more than $1,000 or more than $1,500. Not very often, but every once in a while it might be more. So you might be able to get away with a lot less. And if you have any further questions, let me know. I hope I answered that. Where can I learn about the Premier Level 5? On my channel, and also I put a link in the description of kind of the sales portion of that, which gives a lot of information about it. So mainly check the link in the description, and then you can go onto my channel and you can see different videos that are about it. Remember Tom King. Tom King, yeah, he might have been one of those guys that shows us P&L, I think. It's hard for me to remember exactly. Harder to find in all the videos duration. He has shown us P&L over a couple of years now. So I guess you're talking about Tom King. Is he the guy that's trying to buy a Tesla? I don't remember. Richard makes a point here. Make sure that CHWY isn't inflated because of earnings. Even if it is, I wouldn't shy away from it, but you may want to add that to your way of trading it. It might be. It looks like it could be coming into earnings right now. As you can see that the implied volatility is much higher this week compared to the future. But see, here's the thing. You're going to get a higher premium this week compared to, let's say you go out 130 days and buy that put hedge. You see the put hedge is only the 70. It's normalized. The implied volatility is normalized. You're not overpaying here for this put hedge. But you are getting better premium here if we're coming into earnings, or for some reason there's some type of binary event. You're getting better premium in the short term. So it actually kind of works to your advantage to be coming into it, as you can see. And I hope that makes sense. If anyone has any further questions about that, I think that's an important thing to talk about. Well, you once said that, like the put hedge expiration date, close to 150 days, and you generally are looking to exit when it's dropping below 100 days. Yes, correct. Thanks, Will. Yes. Charles, might have already been asked, but rolling the long puts up in strike, I'm assuming you mean the put hedge, for a debit, is that a viable adjustment? Yeah, you're going to pay a debit. You're going to pay for that put hedge. You've been in that trade a long time. You probably are profitable more than likely in that particular cycle. And yeah, you're going to pay up. You're going to pay for all that premium that you sold. You're going to pay. Yeah, it's going to cost money. You're going to pay a debit, and I would do that. I would pay a debit to roll that, if it also met all the other criteria within the system. I mean, is there a course to learn the Premier Level 5 or just alerts? So within the Premier Level 5, there is a course in which I talk about the trade structure, which is 50% of the trade, or maybe even 60, 70% of the trade. It's the most important factor, which is a trade structure that you won't see anywhere else because it's proprietary. And again, the trade structure itself that you're going to learn. If you just paid $200, the first month and went in there and learned that trade structure, you more than got your money's worth. I mean, that trade structure is proprietary, and it's something that if it's not traditional. So I always talk about these traditional strategies, the iron condors, the wheel strategy, all these traditional options trading strategies, they all have a weakness, right? This particular trade structure, if you trade it correctly, so far, based on back tests and forward tests, it doesn't show a weakness in any market environment. I mean, obviously it does better in some markets versus others, but it's not really a weak system. It's like got some real strength to it. And just the trade structure alone that you're going to learn is phenomenal. And then you watch and you see how I trade it. Let's just put it this way. I think it took me about 20 years to learn how to be a profitable trader. If I got into this level 5 thing, say somebody else was doing it, I probably would have been a profitable trader in like 6 months. Like, I would have taken that trade structure and played with it myself, and I would have figured out, whoa, here's the best way to trade it. Obviously, that's what I did with it. That's why I recommend that you follow the way I trade it. But you can figure out another way to trade it and make profit with it too. I mean, you don't have to follow me. So, I mean, if you want to trade the way that I do, which I feel is the best way, just learning that trade structure alone is worth a lot. But you're not going to get you're not going to get my trade plan. You're going to watch me trade my trade plan. You're going to learn my trade plan by watching me and seeing me in certain situations. And you might be able to pick up my total trade plan by watching me, but I'm not going to, reveal that total trade plan. The only way I'm going to reveal it is you're just going to watch me trade it. So as far as getting my trade plan, you're going to get about 85% of it but you're not going to know all of it because not every scenario has occurred since I've been trading the PL5. But if every scenario does occur while you're following me, well, you're going to pretty much pick up the trade plan then. Gene, why would you trade different strategies than not only one if this one is working in any condition? Well, I believe the safe wheel is going to work in any trading environment. I believe the earnings edge is going to work in any trading environment. The PL5, and of course the synthetic dragon. Those are the 4 systems that I trade, and they all are designed and so far work in any environment I can see through back testing and through trading them with real money. But do I like one better than most of them? Yeah, that's where I have most of my money in the synthetic dragon. I have most of my money into that. So I like that one the best. And the only way to get that is to get into my managed strategy, which would be to become a client. You need $300,000 to come in, bring your money. I will manage your money for you in an account that you own and control. And then I link to your account, and whatever trades I make in my account get duplicated in your account. That's the only way to get access to the synthetic dragon. Okay, any other questions for today? I hope I covered everything I wanted to cover today and answered all the questions. All right, I'm going to go ahead and end the broadcast, and I will see you guys back next Monday.